What's up, everyone? It's Karthik with MoneyVest. Markets here pushing higher very nicely. We had a very solid green day across the board for all 11 sectors in the S&P 500. The portfolio was green a lot, and we had the NASDAQ here pushing up over 1.4%, with the S&P 500 up over 1.23%, and the Dow Jones rallying over 427 points on the day. Elections are still ongoing as we speak, and we'll most likely hear the results of these elections in a few days' time. Tom Lee was on CNBC yesterday. He talked about the surveys that he's conducted with his investors, and 40% of the respondents believe that we're not going to hear back from the results of the election at least 1 week after today. So most likely next Tuesday is when we're going to actually find out who is going to be in the White House next year when we see this transition of power. But nonetheless, markets rallying very nicely on a little bit of that certainty coming in, with 4,600 stocks rallying on the day, with about 1,663 stocks declining on the day, and almost $600 billion positive change in the S&P 500, over 1% gain. And of course, Magnificent 7 rallying over $226 billion, and we had the top 10 up over $250 billion, with the big three, Nvidia, Apple, and Microsoft up over $126 billion collectively. If you take a look at the Palantir stock, which was the biggest gainer in the S&P 500, so under market concentration, you come over to percentage change. We had Palantir pushing up over $23 billion on the day, up over 23.4%, a very strong feat for this company. And again, the top stocks in terms of market cap gains, we had Nvidia up almost $90 billion, we had Amazon up over $35 billion, Meta up over $30 billion, Tesla up almost $30 billion as well. So we had all sectors, all 11 sectors pushing higher on the day. With QQQs leading the charge here, discretionary, industrial, utilities, and technology. These were the four sectors pushing up well over 1.5%, closer to 1.5%. Real estate, 1.3%. We had comm services up over 1%. Financials, healthcare, energy, staples, even the bond market, so TLT, also pushing up over 0.5% as well. So this is what the market looks like. Tesla up 4, Nvidia up 2.5, Broadcom pushing up 3.3, Apple, Google, Meta, Oracle, Palantir, of course, Microsoft. Pretty much every single stock here was moving higher, and the portfolio was up just a little bit over $9,100 on the day. So not bad. And of course, the options portfolio, which is separate, all the long-term positions, which is mostly comprised of Nvidia and Tesla, doing really well, right? So Nvidia was up, Tesla was up, so that portfolio also doing very well. So if you want to get access to everything, all the trade alerts, including members-only videos, I posted this video for the MoneyVest Index, going over a lot of historical analysis, 30-minute video going over the Bell distribution curve, the MoneyVest Index, the value of it, the representation every single year. It's going to be linked down below. And of course, you get access to our MoneyVest platform. Few more spots left, and you get access to the entire new features that are coming up every single month. We're kind of building the screener tab next. Of course, the elite investors, which we added very recently, as well as the shopping list with about 29 high quality stocks that you can take advantage of, with my buy targets also included. And of course, the MoneyVest Index, which now trades at 3.56, or back above 3.5, in a little bit of that optimistic zone for the market back higher. So from a risk reward standpoint, we are back to the optimistic zone after today's rally. Now, I really wanted to address some of the comments from my yesterday's market update. Seemed like a lot of people, well, at least quite a few people, were frustrated from that market update. I'm really not sure why, because I really want to go over some of the very important data points when it comes to investing and long-term trading in the markets. This is the data point that I've also shared in my previous videos, and I don't know why, quite a few people got frustrated in my yesterday's market update when I specifically mentioned that, if the deals actually come our way, if there is any type of a market sell-off, then I think there's going to be buying opportunities in the market. And, here's the problem, sometimes is that sometimes it becomes very challenging, because I can come off as like being bearish on the market, and even though I've never been more bullish or optimistic about the long term, about the S&P 500, the NASDAQ, or the markets overall. Now, I have mentioned many times over that, I want to be on the record for this, that I personally believe that the biggest risk for the US is the amount of deficits that are running every single year from a fiscal standpoint. I think if that continues at a very unsustainable level, we're going to eventually get to a point where the national debt is going to be too big, with interest rates with the average interest rate also increasing every single year, that perhaps is going to be the biggest risk for the U.S. economy. And what's going to be the essentially the end game for the dollar is the real question, which, look, I don't have the answers to that question as of yet. However, I am very optimistic about the long-term potential for the U.S. markets as long as only one thing continues to grow, and that is the bottom line earnings. I've mentioned this like 100 times on the videos on the channel before, is that as long as the earnings are growing, the markets are just going to be fine. The moment you start to see the earnings decline or plateau or start coming down is when we are in trouble. Because at the end of the day, like everything that you listen to when it comes to the elections, the FOMC, the macroeconomic events, the data points, unemployment, inflation, war, pandemics, recessions, depressions, doesn't matter what it is. Everything boils down to just one number, and that is the bottom line earnings for the top 500 companies in the world, which is the S&P 500 in the US, and how is that going to be affected? Because the S&P 500 at the end of the day is just a multiple of earnings. That's it. And so if the earnings are growing, the markets are fine. The earnings start to decline, if earnings start declining, the markets are not going to be fine. It's plain and simple. And so I have always tried to be as realistic as possible, and I've also tried to come out here, put myself in a very vulnerable spot to kind of help you understand and guide you when the risk reward is in your favor versus when it's not. Now, I did a video, right? So I've mentioned this earlier in this video where I talked about the MoneyVest Index and how I use it. So this is a video goes over the MoneyVest Index, what we have created, and why it's so important as a buy signal, right? So I've gone over the distribution curve here, the different ranges, the different values, and what constitutes as a buy signal for me personally. So I highly recommend that you check out this video because it's going to give you a little bit of an insight on why it is so important to catch the rarity of these market events, the tail events, right? That's what we're trying to capture is the tail events. And the tail events is what ends up making all the difference in the world. It's very easy to be a buyer when everything is going on well and everything is hitting new all-time highs, when there's a lot of euphoria, when there's a lot of greed. But the difficult things in the market are to buy when it feels like the sky's falling apart and it feels like the markets are just getting crushed and there's red everywhere you look and there's a lot of fear and a lot of panic. And that's exactly what we try to capture on the channel. Last time, I talked about August 2024, April 2024, two very serious buying opportunities. You go back, you check out the videos from that time. Both of my shopping lists essentially came out during that time because I felt like the risk reward is very good. And that's when the buying opportunities make a lot of sense, as opposed to buying at all-time highs, because everyone can do that. But not everyone can pull the trigger when markets are selling off and there's a lot of deals out there. So okay, that's really what I wanted to go over. And, this is the type of analysis that we conduct is that, going back 200 years worth of analysis on the S&P 500 and given any 20-year rolling period, if you take a look at rolling years of 20 years in the market, the probability of you losing money is next to nothing, right? It's almost 0%. Negative, positive is about 100%. And if you're invested for 10 years or more, you've got a probability of over 96% that you're going to be positive. 15 years, 98%, and 20 years, it's practically 100%. So it is obviously, I understand the data points. It is obviously in my favor to always be bullish, right? I can come out here and I can always be bullish. I can always hammer on the bull and be like, folks, it's time to buy. It's buy. Markets are going to keep going higher. And eventually I will always be proven right. But that's not the game that I'm playing. I'm trying to be as realistic as possible with all of you to try to help you understand both the short, the medium, and the longer term and what that looks like. And sometimes the confusion arises because if you're a long-term investor, you may confuse what my views are about the short term, even though you think that they're my long-term views. And then if you are a short-term trader, you're expecting some volatility, you're expecting some rebound or technical rebound, and my long-term view is a little bit different. So that is where the confusion comes in, and I would highly encourage you to just take a step back, understand where I'm coming from. I'm coming on from a very, very realistic perspective about the markets, and just understand and know that as long as earnings are growing, Karthik is going to be bullish and optimistic about the U.S. economy and the markets, and he's an investor in the markets and the economy, right? So I would never want the markets obviously to go down, even though I get more excited when they're selling off because that creates better and more buying opportunities. That's exactly what I want for everyone is to dollar cost average and buy more when the deals are ripe for the taking and avoid when we are at a very, very overheated and expensive market to try to avoid yourself from any type of catastrophic losses. So I'm always going to give you a very realistic approach, right? That's the whole idea. Is like I'm never going to be like a blind bull or a blind bear, but I'm simply going to give you the statistics, and the Money Invest Index allows me to do that. And so if it drops below 3.5 or below 3 or 2.5, it's a buying opportunity for me. But if it trades back above 4, 4.5, it's not a sell signal, right? So that's the caveat there. It's a buy signal, but it's never a sell signal for me. It's a buy signal, but it's also a cautious signal on the upside. So I'm not really doing anything on the way up. In fact, if anything, I'm just selling calls and I'm dollar cost averaging back to my normal baseline levels, which is maybe a couple $1,000s on SMH, VUG every single week, but that's about it. So hopefully that gave you a little bit of an idea on how I like to view the markets and approach the market. This is the bell curve going back over 200 years, and it's going over returns for every single year in the S&P 500 since 1800s. And look, we've done this analysis before. This is simply showing you that there are more green years than there are red years, and the green years are more occurring and also more aggressive than we've seen the red years to be. So it's always in our favor to continue to have a optimistic outlook on the markets for the long term, because nobody ever made money being a bear all the time, right? So that's something that we have to always remember. Michael Burry, of course, he got it right once, but long term, if you take a look at his returns, it is very, very subpar. And Peter Schiff, same story. Warren Buffett, on the other hand, very, very strong. Peter Lynch, on the other hand, very, very strong. Howard Marks, on the other hand, very, very strong. Bill Ackman, on the other hand, very, very strong. So it is always in our favor to be net long than it is to be net short on the markets over the long term, because the data is in front of us. So I'm never calling out crashes. I'm simply pointing out if there's opportunity in the market so we can buy and participate in these rallies when the markets are giving us those very strong days. So the Money US Index is 3.53. Now we are back in the optimistic zone, and some people might read this and be like, again, there's no, caddies calling for a sell-off and there's going to be a market crash or whatever. No, this is simply a risk gauge for the market. That's what we look at from a risk-reward standpoint. So this right here is where we are currently. We're still in a dip, meaning 0 to 5% pullback in the S&P 500, because if you come over to the market snapshot, you'll notice that we are still well within about a 1.5-2% dip in the market here off of its all-time highs. Dow Jones, same story. NASDAQ, same story. Apple is in a pullback. Amazon's in a dip, so it's very close to its all-time highs. So 4K Friday is finally here. We're almost up to $200 per share. Meta's in a pullback. Microsoft in a correction. Nvidia's in a dip. Alphabet is still in a correction. Broadcom's in a pullback. Tesla's still in a bear market, although pushing higher today, back under 40%. Down from its all-time highs. So that's where we are with this entire market. Volatility is coming off a little bit over 20 right now, but it's down over 6%. And here's something interesting. We have seen the volatility above its 200-day simple moving average for, I don't have that chart here right now with me. I don't know why. I had it, but maybe I forgot about it. But volatility right now, as you can see, trading above 20 for 79 straight days. It is above its 200 daily moving average, and that is the longest level since 2019 is what we have seen for the VIX. The last time you saw that for volatility was back in around here, and right now we're once again seeing the volatility above its 200 daily moving average for 79 straight days, and traders have also piled up in their largest bullish bet on equity futures on the long side in the tune of $300 billion ahead of the election. So, markets seem to be very, very bullish right now as we kind of, progress with this election day, as well as the FOMC meeting that's coming up later this week. FOMC is going to be scheduled for Thursday. So if you come over to the market calendar, on the economic calendar side, under medium to high impact items for the market, we've got the Federal Reserve Conference at 2:30 p.m. Eastern, as well as the interest rate decision, where the most anticipated decision is going to be a 25 basis point cut, getting us down to 4.75%. And of course, the presidential elections taking place right now. Coming over to Bitcoin, we did get back up to almost $70,000. In fact, we were trading as much as $72,000, $73,000 a few days ago. We got a little bit of a pullback. Right now, we're just hovering under 70,000. Support level is going to be inside this green rectangle here, somewhere between $59,000 and $61,000 for Bitcoin. And we already went over volatility, coming back down a little bit on the day as the markets rally pretty hard. And crude oil prices trading just under $72 a barrel right now. So trading just at that resistance at $71 to $72 a barrel for crude oil. Now coming over to the markets, S&P 500 here, pushing up very, very strongly, up over 1.2%, back above this resistance of 57.66. And the next target and next level is going to be here at 58.78 for the S&P. And of course, support level roughly around 56.73 here. So we did get a little bit of a 3% pullback in the S&P, and the NASDAQ also did see slight little decline here, about 3.7, almost 4%, getting bought back up here. Resistance all the way up to 18,657. So nice, strong day for the NASDAQ as well. Apple here did see a nice pullback. We heard from, over the weekend, Warren Buffett selling another 100 million shares of Apple, buffing up his cash position even more to over $300 billion. And Apple here support very nice, validated at 220. Got a nice little breakdown over here. RSI came down, so did the MACD. Support level roughly at 221. And again, resistance all the way up to as much as 236, 237 for Apple moving forward. Talking about Amazon, and Amazon here near all-time highs, so very nice momentum coming in, almost 2% higher. And, the interesting thing is that everyone seems to be waking up to Amazon now, which it kind of feels like we've been talking about forever. I talked about how Amazon's profitability is only just getting started. And if you guys remember correctly, we did actually a live stream about this as well, where I asked you point blank, who do you think on the Max 7 is going to have a higher growth rate for profitability? And if you guys remember correctly, Amazon was the stock that I mentioned is going to have a lot of profitability because it never focused on the bottom line and profitability, at least not under Jeff Bezos, right? They were mostly focusing on growth. They were reinvesting almost everything back into the business. And since Andy Jassy has taken over AWS, which is a higher margin business, and the fact that they are able to now finally focus on profitability, higher margins, that's where a lot of involvement on institution side is coming in. That's why there's a lot of excitement about Amazon's future. And in my opinion, the earnings per share growth for Amazon could be a lot higher than that of Tesla, and in some arguable cases, even Nvidia. So I remain very bullish on Amazon. I think Amazon's got a lot of potential upside here. Still in its infancy stages compared to some of the other companies who have already maximized for the bottom line and profitability, like such as Apple and Google and Meta. But Amazon, in my opinion, is only getting started for what it can achieve when it comes to the bottom line and profitability. And, advertising was one of the biggest growth engines as to why I was looking into Amazon in the first place. I've talked about this many times before, and it's kind of nice to see that it's finally paying off, and it's, back up to almost all-time highs here. Resistance is going to be roughly around $200 right now. Coming over to Tesla stock, and Tesla here is still struggling, although it did push up over 3.5%, so not bad. It's somewhat linked with the political discussion here on the day with elections as well, but resistance is going to be all the way up to $270 per share for Tesla. And of course, we've got a massive gap over here that we have left. Support level is going to stay at roughly $205 for Tesla here. Nvidia also moving back higher, 2.8, almost 3%. I will be rolling out these contracts at the end of this month to possibly at the end of December or maybe even January of 25. So that trade alert will be sent out on our Discord. Resistance for Nvidia back up to 144. Support level is going to stay put at 136 for this company. Talking about advanced micro devices, and AMD here also continues to sell off, trading at very, very strong support. I may be selling some AMD puts very soon. I'm just waiting on my cash to clear, and then I can sell some puts on the options portfolio as well. So AMD is on the list of that stock. TMF is on the list of a potential CSP, although it's now starting to already move higher, 1.5% up. In my opinion, TMF TLT does offer very good risk-reward trade-offs here, as the US 10-year treasuries are sitting at a very nice lower high, and that's the resistance we have discussed on the channel before. So it's a nice little trade-off between the 10-year treasuries and the TMF, of course, with a very nice setup at the moment. Now, coming over to PayPal stock, and PayPal here on the day also recovering back up over 1.4%. Support level roughly seeing $76, $77. Resistance all the way up to as much as $81 for PayPal. And a nice little staircase is up pattern for PayPal, of course, sold off after the earnings, but that's going to be that resistance at $81. Talking about Visa, and Visa here also moving higher very nicely, starting to see a little bit of that breakout once again near all-time highs, and support level is going to stay put right here at 292 for Visa, and of course the all-time high sits well over 296 for this company. Coming over to Meta Platforms, and Meta here on the day, pushing up over 2%, so not bad. Of course, it's been selling off a little bit, so lower highs and lower lows, but resistance and target is going to be all the way up to $602, $603 for Meta moving forward. Support level sitting roughly at 540 for this company. Netflix here consolidating sideways as well. Resistance all the way up to $772. support level at $736 for Netflix at the moment. So a lot of consolidation at this moment. And Google here also selling off a little bit down to that support at 169, resistance all the way up to 175. And of course, gave back pretty much all the gains from its earnings. So gapped up significantly, sold off intraday, sold off even more, and pretty much back down to pre-earnings levels, roughly in the 160s, 170s here. Resistance is going to stay put at 175. Microsoft, on the other hand, dropped off after the earnings, and it's pretty much staying there in the low 400s. And support level is going to stay put roughly here at $400. Resistance all the way up to as much as 432 to 441 for Microsoft moving forward. And last but not least, we got Inphase and Costco. So Inphase here seeing some momentum come in, almost 3% higher on the day. So not bad. We'll go ahead and turn this level into a support. But we're coming up to a huge resistance right now for Inphase at the moment. And finally, we come over to Costco. And Costco here also pushing up from that support of 867. Resistance all the way up to as much as $919, $920 for Costco as well. So that right there is going to be that level of resistance, support level at 867 for this company. So hope you all enjoyed this video and a complete update on the markets here. Elections are underway, so definitely go and vote. Your vote matters, your vote counts. And as always, make sure that you drop a like and subscribe to the channel. Hopefully, I was able to explain things a little bit better in terms of why we look at certain indicators and why they are so important for us in our decision making. At least for me personally, it's been one of the most useful indicators that I've used to better understand the risk reward in the market. And of course, you can access pretty much everything on the website. Other things like the shopping list is going to be available right here. The elite investors, we added this feature last month. Market concentration, calendars, snapshot, money vest index, as well as doing your full fundamental analysis on individual stocks. And of course, get access to all the members only videos, including all the weekly updates on the options portfolios, their trade alerts. Everything's going to be available with the link down below. As always, happy investing. I'll see you all in the next video.